Hey guys, Stockaholics, appreciate you guys for being with me today. Today, I would like to talk a little bit about tankers once again. I was thinking, I'll probably do one of these updates at least once a month, even if the news in the sector is kind of dead, just because I'm following it, and I know there's a lot of tanker bros out there that would likely be interested in that. So, here we go. First of all, December, we're talking about some of my thoughts. And I would like to say that I think this is a mixed bag. I think that there are some things that are bad that are happening, especially in the short term. But I think that these all kind of make sense in terms of a long-term bullish thesis. First of all, I'd like to show you guys the tanker market index. This is courtesy of Clarkson's. And this was updated, I believe today, December the 11th, 2020. And you can see that if we're looking at this blue line here, this is the rates for all tankers, kind of the sum of them and average of those things. Well, that anticipated potential growth that many people were expecting this year. And December, I would like to remind you guys, is one of the strongest months for tankers seasonally and historically. This hasn't particularly materialized. Now, will it materialize in the coming weeks? I don't know. I would suggest that it probably will not. And that is because I think that demand particularly is still lagging. And I really do think that for 2021, in particular, it's not going to be a great year for tankers. Okay, I think that is because oil demand is going to be low. Now, these lockdowns and these sorts of things that we've seen, particularly in Western countries over the past year, they've had consequences, and a lot of those consequences, I believe, have not yet come to light. So there's been damage to particularly Western economies. And I think that we're going to see some of the results of those in the coming weeks. But I don't think that those things particularly contribute to an increase in oil demand in the short term. So I wouldn't expect these rates to increase much unless there's an event such as war, which I had mentioned in another video and I recommend you guys check out. So yeah. But as you guys all know, well, it is not all sunshine and rainbows in tanker land. One thing I want to show you guys, and by the way, this is the new orders of tankers as of the 11th of December. If you look at these years, from January 2010 until late 2015, the amount of tankers has been relatively high. And this was during a time when tanker rates were particularly lousy. There was an oversupply in the tanker market. But there was still a lot of institutional money in the market. There was still banks that were giving these people loans to buy new ships. The investors were still optimistic on the industry because of the bull market that had predicated this. So there was still a lot of ship ordering, yeah. But as you can see, this optimism has been waning a little bit in the years following. Now there's some spikes here, particularly following 15, 16, and 17, when there was really good rates. And this is because, like I mentioned before, there was an oversupply of oil in the market, and a lot of that oil went onto tankers. Now, in 2020, there is something that I would like you guys to know, and that is that there has been a large amount of orders, particularly in the VLCC segment. Now, during 2020, VLCCs were some of the most profitable ships, and I think that could have something to do with why so many have been ordered. But who has been ordering this? This has been a national initiative, particularly from China. China has recently ordered somewhere between 20 and 30 VLCCs, And this is, like I mentioned in another video, is because they want to have a sort of national security in terms of being able to ship their own oil. So if their nation owns the VLCCs that can transport this oil, it doesn't really matter what other countries do in terms of sanctions and things of those nature, if they control their own shipping routes, right? But will we see more of this? Maybe, maybe not. Now, these companies have been relatively flush with cash in the last year, and I would suggest that most of these companies are still nervous in terms of new orders, particularly because I think that they think what I think, and that is that 2021 is likely to be a lousy year. And in addition to that, you have those IMO regulations and that uncertainty on what that could look like in the future. And so I do expect these new orders to remain relatively low in the coming years. We would like to keep an eye on China in particular and see if they do more of these kinds of things. But we would also, it's important that we keep an eye on these tanker companies, because like a lot of things, like a lot of people, they may say certain things but do another thing. So it's important that we, I guess, trust them, but we also verify what they're doing. All right, so I forgot to talk about this. I recently uploaded this video on YouTube. A very select few people noticed the video without this, but I wanted to re-upload it because this is important to say. So this is scrapping, and you can see that this is very important for the long-term bullish thesis for oil tankers. If you look in 2010, 11, 12, 13, 14, there's a large amount of scrapping, and this correlates with the low tanker rates. Now, if you look in 15, 16, and 17, there was also very low scrapping. Again, this correlates with high tanker rates. As rates are high, people, they don't want to scrap their ships. But right after this oil glut that we saw in those years, it was a lousy market in the tankers. Rates were terrible. And simultaneously, we saw that these ships are very old. So we saw a very high amount of scrapping. In 19 and 20, particularly in late 19 and the first half of 2020, there has been very, very strong rates. In addition to that, the surveys that we have seen on vessels have been postponed. So those kind of maintenance costs to see that the ship is up to date, is up to par, is meeting all the requirements necessary to maintain operation. A lot of those have been deferred because of coronavirus, and a lot of those deferments are coming to an end. So I would suggest that in 2021, when we see those deferments come offline, and when we see a fleet, an older fleet that is older than in 17, 18, and 19, and when we see what I believe are likely to be very low rates in 21, it could lead to an astronomically high amount of scrapping. And this is what I think contributes most to the bull thesis for oil tankers. If we do see an astronomically high amount of scrapping, when we see a simultaneous increase in oil demand, that means that that's going to lead to a sustained bull market for tankers. Okay, I also wanted to show you guys this because I think it is important, particularly if we believe that rates might be going down in the short and intermediate terms, right? So I'd like to show you guys rates versus stock prices. So I'm going to take these two tanker companies here, Scorpio Tankers and DHT Holdings. Both of these companies, like most other tanker companies, have a very familiar pattern if you've been following this industry. Now in 2019, you can see that both of these companies, they've been, particularly towards the last half of 2019, they had been escalating in price. At the beginning of 2020, they had a massive sell-off. I believe a lot of this had to do with anticipation that IMO 2020 was going to have an impact on rates. That didn't really materialize. So a lot of people believe that the regulations in IMO 2020 would lead to a sustained movement, or at least some kind of some holding pattern in rates. But you can see over here, well, that didn't tend to manifest in January and February, when rates subsequently declined, implying that the tanker market was still oversupplied with the amount of tankers. But as many of you guys know, in March and April of this year, we had the COVID lockdowns that led to a massive spike in rates during that time. A lot of that due to storage on these vessels. And you can see in both of these stock prices, there's a similar pattern where both of these stock prices were following movements in these kinds of rates. Now, DHT for some reason has significantly more volatility during this period. I'm not sure why, because normally Scorpio Tanker is the more volatile of these two stocks. But in any case, you see these patterns in both of these stocks, right? You can see but since about April, May, June, July, all the way until about the beginning of December, both of these we've seen a decline, and recently, however, we've seen a slight rally. Now, this is correlated to both the rates and a change in optimism, and particularly because of the the vaccines. So I would suggest that these moves here are quite low, considering both a slight improvement in rates and the general market optimism. So I would like to suggest to not for tanker bulls, not to go out and panic and sell your shares, but I don't want to sell you guys all sunshine and rainbows, because they're especially if oil demand remains low in 2021, I would suggest that there is still significant downside in these kinds of stocks. Now, will I be selling because I think this is happening? No. That is because I've said in some other videos that these stocks are undervalued and that I don't necessarily know how to time a bottom. Okay, I'd also like to suggest that I believe that oil demand is likely to stay low in 2021. However, like I've mentioned in a few slides before, I think that this is important for the long-term bull thesis of the tanker industry. I still believe that the oil tanker market is slightly oversupplied with tankers. Now the fleet is extremely old, but for us to see that bull cycle that we want, a sustained bull cycle or a super cycle, if you will, it's going to require scrapping. We want to see both an undersupply of tankers in the market with a simultaneous growth in demand. And I think that this is going to be important for us to see that to come about. All right. So first of all, oil demand is likely to stay low in 2021. The IEA has cut its forecast for oil demand growth by approximately 400,000 barrels a day. 400,000 barrels a day, to show a decline of 8.8 million barrels this year. It's far too early to know how and when vaccines will allow normal life to resume. And I agree with this. Just like oil tankers are very hard to turn directions. So let's say, for example, I've got an oil tanker and it's moving at, 30 knots or whatever. We'll just say a reasonable speed or a fast speed in the ocean. For that tanker to go and turn around, that's going to take time, right? Now, just like that massive oil tanker would take time to shift directions, so does an economy, right? So for now, our forecasts do not anticipate a significant impact in the first half of 2021. And I would suggest to you guys that I would not anticipate a significant change in oil tanker rates in 2021, just like these guys don't anticipate oil demand growth. The IEA predicts a recovery in oil demand next year of $5.8 million per day, but this is only 300,000 barrels per day higher than its forecast a month ago, even with Pfizer's and some other vaccine makers' trial results. So in the Western world, we've seen continued spikes in COVID cases. We've seen continued poor management of these, particularly in the form of lockdowns and some, which I would argue, irrational lockdowns, but in any case, that's just an opinion. These cases across the United States and Europe will drag on, and this is going to put a drag on global demand growth. Now, I've argued in some other videos that I foresee in the long term some oil demand growth, not particularly from Western nations, but from Africa and particularly from most of Asia. But in the short into medium term, the demand in the Western world does matter. Now, I'm not going to say it's insignificant. These nations have some of the highest oil demands, particularly because they are some of the most developed, right? So if we're going to see a lockdowns and these things, it's going to cause oil demand reduction. Now, I've made a couple of videos also, such as the evidence of the coming stock market crash video, where I'd suggest that this is going to be here for a while. You know, that we haven't seen, I believe, the full impacts of a lot of these lockdowns. The insolvency event, I believe, in the Western world, we haven't yet seen that. It's been pushed down the line because of government stimulus, extensions on unemployment benefits, and because of deferments on loans. But there is a silver lining in all of this. We have seen oil demand almost reach its full potential. Its full demand prior. The Eastern world has reached the oil demand that it saw almost before COVID. So a lot of these nations are either at the COVID level. Some of them are actually higher than the pre-COVID level. So there is some optimism to consider in this. In any case, I'd like to thank you guys for being with me here today. If you found this information useful to you, I would greatly appreciate a like. And I guess I would like to close by reminding you guys to be patient, especially if things turn around, because as all good things do, they take time.